Zeta. Zeta is a company that does data analysis for marketing and customer acquisition. And it does both things. Like, it actually shows you where your customers are, like what target market and segment.
Yep.
And then it also will give you campaigns that you might launch. And in some cases, they've shown on their 2023 presentation, they reduced their customers' cost by like 20%. These are millions of dollars that they use in marketing every year. So it's millions of dollars in savings, and it becomes free cash flow to Zeta. So eventually, a net income positive company, not yet, still kind of speculative at best. Matthew's going to show us the qualitative part.
All right, so I'm going to share my screen with everyone. So pretty much what we have here is what Abe is saying, is that a bit of a synopsis of the company is this company makes money by subscriptions. They try to get big companies to subscribe to them, and they do AI targeted dating marketing, advertising, those types of things. Competitors would be someone like Atlassian, one of those like big data companies. Even Adobe does some of it. Oracle does a portion of it. Right here, this analyst didn't do a fantastic job of it, but right here in this pie chart, we have just the breakdown of total revenue of where it's coming from, the different sections it's coming from. So the most of it's consumer and retail, 17%, 15% is telecom, 10% services, 10% financial services. So that's how they're primarily making a good portion of their money, which is great to see. And I'm not going to cover a lot of this stuff. This is more technical, and Abe is going to cover. I wanted to cover something very interesting, and I want to make sure Abe could see this because this is on Zeta's own website, and I thought this was absolutely fascinating. So recently, October 8th of this year, they announced Zeta Global to acquire Live Intent in a highly accredited transaction, okay? So what's interesting about this Live Intent company, and I was reading a bit about it, is that it is people-based marketing with proprietary technology powering mobile-centric experience and first-party identity solutions to identify, unlock, engage, and monetize audience across channels. So essentially, Zeta is showing you as the potential investor of what they're looking more towards. And these are the 3 points of what Live Intent's assets are, right? So the first one is enhancing identity resolution capabilities. They have over 235 million unique hashed email addresses per month, and that's going to be integrated into Zeta's data cloud. So that's great to see, and it's going to be integrating their marketing platform. So again, that's what they're targeting, which is wonderful to see. Number 2 is expanding into publisher monetization. With the addition of Live Intent's 2,000 plus premium publishers, including relationship with 8 of the 10 largest in the Comscore rankings, Zeta is entering the publisher monetization business, which is another fantastic thing to see. And then third is elevating Zeta's newly released mobile and retail media solutions. The acquisition accelerates Zeta's recently launched mobile and retail products, empowering marketers to unify identity across devices and channels, predict customer behavior, uncover hidden opportunities, and leverage AI in real time to activate intelligence-powered cross-channel campaigns and drive better outcomes. So this is really what they're targeting, and I wanted to go over this because this is the vision of what they have. They want to be, I suppose, the premier AI marketing company in the stock exchange. So hand it over to Abe, let him cover anything that I missed or the finances.
All right, so the first thing is the company a good investment or not? I just want to get that out of the way very quickly, okay? So AI marketing, great. Now let's look at the numbers. So net income went from, this is in thousands, so negative 72 million in 2020 to trailing 12 months negative 145.
A double.
2023 negative 187, so it's not great financially. And then if we look at the projection, would they project, like what most guidance on the analysts do for this is that they're going to lose less money by the end of 2024. So they lost 279, now they're going to lose 187, and then 2025 they're going to lose 73. So it's going to halve the expense and break even by 2026. So normally the stock wouldn't be worth anything if even along the lines of 2024, it shouldn't. The only reason it would be worth a lot in 2024 without any proven free cash flow is a lot of overvaluation that we can see in the analysis. And if we look at the free cash flow and project it out, by the way, which I think is currently positive only because of depreciation, not because of their net income, which is a bad sign still. Like it's not guaranteed cash flow.
Right.
it's overvalued by 21%. So if you do the analysis for a year at 9% discount, 3% terminal growth using historical growth, I get $22 fair value. Tipranks gets $20 fair value. That's a downside of 25% on average. So
Yeah, I agree.
even though here it says 13 buy ratings, nobody, like, the average projection is sell minus 25%. So like,
Yep.
so
Yeah, no upside.
unless you're calculating huge hype into the company, I think obviously eventually it'll grow into some kind of valuation. So if we do 5 years, I'll show you what it'll look like. If we do 5 years, and let's say it grows better than expected, it'll be around $38 a share. What's it now? 28. So it's too expensive.
27.90.
Yeah,
Yeah, it's way too high.
it's not worth waiting 5 years for
No,
like 30%.
agree.
You can probably get 30% on good large companies like Google, easily.
All right, thank you, Abe. I appreciate it. Was there anything else, or you're good?
Yeah, I think. Yeah, I wanted to cover fundamentals very quickly. I know revenue per user was increasing, so everything was fine. I just wanted to say this company is fine. It's just going to take so long for the stock to go up, and it's diversified in like different marketing sectors, so it's not a problem with the company itself, just the valuation.
Right. Okay. Fantastic.
All
Thank you.
right.